get some more analysis of the situation in the Eurozone. My next guest has spent nearly 3 decades on the front line of European economics. Jefferies International Chief Economist Owen, David Owen joins us. Now, thank you very much. Lovely to see you again.
Yeah, hello.
Can I just begin by asking you about what we heard from George Papandreou? They're very strong words. Is that just what he has to do? I mean, does it convince you any more than you were already not convinced that we're going to avoid a default?
Well, I think the unfortunate situation for Greece is that at some point they will have to default. At the end of the day, the IMF, for example, revised up substantially their forecast for government debt GDP in the space of only 3 months. From July, they were forecasting 174%. Now it's going to be almost 190, 189%. Where's it going to be in December? Over 200%. So at the end of the day, a default is very likely. But at the same time, they have to push through these incredibly tough measures. So I feel very, very sorry for them. It's politically unpalatable, really.
So when you hear Merkel coming out, Angela Merkel coming out today very strongly and sort of supporting what's happening in Greece, is the signal to the markets that whatever happens, we will manage a default? Is that what she's saying, rather that, you know, there's not going to be some kind of dreadful default that we don't know anything about? We'll manage it the best we can, as opposed to there won't be one? Well,
I think I have to accept there's going to be one at some point. It's just whether you have a default now. Is there a firewall in place to actually protect the rest of the system? It's not just a situation where the Greek banking sector would go down simply because they hold so much of the sovereign. But also we know that banks in the core are very exposed to Greece, but moreover, if it led to contagion, and in particular what must surely worry policymakers if you had deposit flight from the periphery, if, for example, more people started discussing an EMU breakup scenario. We've had a default, now we're going to have a breakup. So everyone then would think about moving their monies out of the periphery into the core, to Luxembourg, to Switzerland, to the UK, and then the poor old Bundesbank would be pumping in ever more liquidity into the system.
There has been quite a big flow of deposits out of Greece already. Is that something that people are watching very carefully, and is it happening elsewhere, Ireland, Portugal, I'm thinking? Well,
I think Ireland's the most obvious, which has seen actually quite a high degree of deposit flight. But the Irish banking sector is so much bigger, and also, I would warn, still has quite a lot of deposits in the system which could still flow out. In terms of Greece, the numbers in the banking system are coming down, but they're still fairly sticky. But at the end of the day, if you think there's going to be a default, or you think that in particular there's going to be an EMU breakup scenario, you'd get your money out. And we know that with breakup scenarios, first thing that would happen is capital controls would be imposed before the event. So in that sense, you'd be wise to get money out first. So I'm not saying this is happening, but setting off a default, it's like a war game. You set it off, you don't quite know what's going to happen. You can't wind the clock back. So it's like Lehman. What then happens? You know, we've had very clear guidance from the ECB again today. They do not wish a default at this point. You know, we don't have the backstop in play to actually stop the situation getting worse. So at the moment, it's easier in a sense to continue kicking the can down the road. I think the more interesting dynamic is what happens in December, because we're going to have to go through the whole thing again with another tranche going over to Greece. The IMF again has to go in. They have to look at the data. But as I say, in the last 3 months, they revised up their forecast for general government debt GDP in Greece by 15 percentage points.
There was a strong feeling this time round that despite those numbers that do not look sustainable, that Troika really had almost no option but to give the next tranche of the bailout. Will that situation not be the same in December? What will have changed?
Well, hopefully by then we'll have had a policy response. We'll have either some more clarity about what's actually going to happen to the FSF, whether it's become a large bank and get funding directly from the ECB. Hopefully by then the ECB will have seen sense and cut interest rates. You know, maybe asking too much for it to happen in October at Jean-Claude Trichet's last meeting. But maybe Mario Draghi comes in and slashes rates by 50 basis points in November, maybe another 50 basis points potentially in December. But over and above that, the speculation that they'll reopen buying covered bonds and issue, unlimited liquidity for 1 year, all these things to help banks through that difficult phase around the turn of the year.
To you, would that be enough to stop this downward spiral?
It may be enough, who knows. But, they have to move. At the end of the day, increasing the size of the bailout doesn't change the dynamics for some countries. And the other thing I'd warn is increasing the size of the bailout puts some of the AAAs under more threat, particularly obviously France, which actually has to issue more paper in the next 3 years, according to the IMF, than Italy. So you've got all these things going on. At the end of the day, it is a bit of a mess. We'll remain a mess, and it's going to be very, very costly. But I feel very, for Greece, this is savage. This is, what they're doing, purporting to do, is severe.
David Owen, thank you very much indeed. Always a pleasure to talk to you. Come and talk to us again soon. Thank you.